Welcome back to the channel, everyone, here on Futures Trading with Mike. Today, I want to dive deep into the area of supply and demand trading, okay? All right, if you are trying to understand how the big players in the market, the banks and institutions move, if you know anything about what's called smart money concepts, look, you have to understand what's going on when you see certain moves, okay, on your charts, okay? Aggressive moves, which is supply and demand surrounding aggressive selling and buying, right? But I wanted to kind of dig deeper in this video here, get more into detail, because I believe a lot of people get lost in just thinking that every area that they may classify as an area of supply or demand is a great area. No, you have to, there's criteria. There's criteria that you have to kind of put in the forefront of your mind as far as, does this rank as a high area of high probability, or is it more so a low area of probability? You have to understand things like that, because that's what's going to be the basis of, or make the difference between you taking successful trades and ones that flop, okay, when the market turns back around, all right? Trading is an art, okay? It's not a science to it. I've said this many times. So you have to be able to visually pay focused attention on market structure. Understand that. If you do not understand market structure, I've said this, I'm going to continue talking about this in every video. Stop right now, go learn it, okay? Because you will fail. I promise you, if you do not understand market structure, you are not going to make it in this business. I do not care how many times you get lucky. All right. So, but I want to talk about today kind of the criteria, things that you really need to pay close attention to, okay? And I'm going to try my best to kind of break things down so that maybe from an elementary standpoint, it helps you a little bit better, okay? So that you can zero in on to determine, is this high probability? Is it a good zone for me to take a trade from? So let's talk about that in the video now, all right? So the thing about the market, we all know it does what? It has its ebbs and flows. It makes higher highs and higher lows, right? Okay, but the key to really getting to a successful trade is, one, always talk about what? Looking for a break of structure, okay? If you got that. Two, we're looking for what? An aggressive area of buying and selling where price broke through an area of structure, okay? Whether it took out an area of demand or if it took out an area of supply, okay? And then price returning back to that area, okay? So if price took out a major area of demand to the downside, then we're waiting for price to do what? To retrace back to a key area of supply. As long as we have certain criteria that make sense for that supply zone to be a high probability zone, okay? We're going to talk about that, and I'm going to show a couple examples here, okay? And then in the reverse, you know, price is moving to the upside. It takes out supply. Then we're looking to see, was there aggressive buying into the upside that took out a key area of supply? If so, does it meet our criteria, okay? So let's go ahead and dive deep into this today. I'm going to show a couple examples here, and hopefully it kind of rings a bell to a lot of individuals out there, you know? But before we do so, please take the time to go ahead and hit that like button for me, all right? If you're not a current subscriber, take the time to click on the red subscribe button down below. Click on the bell next to it, turn your post notifications on, and one more thing. Join our Discord community free of charge. All you have to do is find the link down in the description portion of this video. We have over 900 community members, and we're growing by the day. So if you're interested in joining a great community of future traders, please find the link down in the description portion of the video. But drop me a like on this video right now, okay? All right, let's go ahead and jump into it. Now, we know at any given moment the market can do what? It can turn around, it can turn to the downside, right? Meaning it can push up or push down, right? So let's take an example here. This is off of a 12 range chart, okay? Doesn't really matter what time frame chart you use. You may trade a 5-minute chart, a 15-minute chart, 30-minute chart, whatever the case is. But one thing for sure, always have some kind of direction or bias of which way the market may be trending, where it's moving to the downside. Or when I say trending, I don't mean trending for a long period of time. It could be a short-term trend. But basically, you're looking, if the market is moving to the downside, of course you want to see where price have broke some major area structure to the downside, and then start looking for pullbacks to, where the market pulls back to continue taking the short entries, right? And then in the reverse if you're going long. Okay, but this is off of a 12 range chart, okay? I primarily take my entries off of a 12 range chart, all right? But I am, focused on what's going on in the higher time frame as well. My higher time frame is a 60 range chart. But taking a look here, what do we see? We see the market doing what? I guess it's just simple, elementary, being able to read a chart, okay? As far as direction. moving to the downside, right? Making lower lows and lower highs, all right? But then at some point, it's going to turn around, right? We all know that, right? So what does it do? Makes a low here, pulls back, makes a lower low here, right? Then it turns back around. What do we see? Starts taking out levels, structure to the upside, right? So we start breaking through areas of structure, taking out key highs, or what I should say as areas where price made lower highs. We start taking out these lower highs where prices run into the downside. Now we're moving back to the upside, making higher highs and higher lows, okay? So as it's doing that, it's making higher highs and higher lows. Again, the market can change in any given direction and start to make, shift and start to make lower lows and lower highs, okay? And it does, okay? So, but it does push higher. It takes out this high right here. This was a big swing to the downside, right? All right. So when it does that, takes out these highs right here and continues pushing higher, it turns around and starts making lower lows and lower highs to lower lows and lower highs to the downside. So you have to understand what's going on with structure at this given time. Taking out a high here, okay, while it's making higher highs and higher lows to the upside. But what I want you to focus on is this right here, okay? We just took out a major, classified as kind of a major high right here. Why? Because there was a big swing to the downside. Price moved up, breaking this area, all right? So pay attention, okay? As price took out this area or this high right here, okay, what did it do? It broke through structure, but it leaving behind an area of demand, okay? So each time price breaks an area of structure, either to the upside or downside, it's going to create an area of supply or demand, all right? Okay, so take a look at this before we start looking further over here, okay? Prior to it making this high right here, what did it do? It made a low here, a lower high here, okay? On the move to the downside, making a low here. So a new low, okay? A lower low. Now, it turns back around and starts doing what? Breaking structure to the upside. It left behind an area of demand on this move here to the upside, taking out this high right here. And then it continues doing what? Making higher highs and higher lows. So it made and left behind this area of demand as it pushed higher, taking out structure, okay? Taking out this high right here. So then it makes a high up here. It turns around, okay? I'm kind of going over the basis of market structure in a sense, so you can kind of grasp with your eyes visually what's going on with price action as it's moving, making higher highs, higher lows, lower lows, and lower highs. So understand that concept. It's drawing structure okay? Creating structure, all right? So as price pushes up here, okay? All right, a lot of buy orders, whatever the case is, breaks this area of this high right here. Continues moving higher, making higher highs and higher lows. Leaving behind demand here. Eventually it folds, starts moving to the downside. So what does it do now? It's taking out this area of demand, okay? So what has it left behind? It's left behind supply, okay? Up here where these highs are, okay? There's supply in these areas, okay? So when price turns around after making or imprinting its lows right here, it starts moving to the upside, making higher highs and higher lows, doing what? Taking out structure, taking out these lower highs. As it's doing that and continuously making these higher highs and higher lows, it takes out this area of structure right here, off of this bigger swing to the downside. We knew this was supply. It takes that area out. So what? Now that it's taking out supply, it's left behind demand. Remember, when price is taking or moving through or breaking through an area of supply, it's leaving behind demand and vice versa, okay? So it moves higher, making higher highs and higher lows. Now, you have to say price just broke out, and took out this area of supply. Now, it created a basis of demand down here as it moved higher, pulled back, broke higher, taking out supply here. It left behind demand. So as a trader, what you're looking for is, this is where we want to get into the criteria of things, okay? All right? We want to, one, classify, did it break through a key area? In this case here, an area of supply, yes, it did. Did it leave behind an area of demand? Yes. Now here's the criteria to determine if it was, when you may think about, okay, so what are you looking for when you're talking about high probability zones, okay? So we've identified that it's left behind an area of demand, okay? All right, as this price moved up, pulled back, and broke higher, it created a demand zone, okay? Now, was there aggressive buying? Okay, Ask yourself, was there aggressive buying at the time? Yes, as price pushed higher, pulled back, broke higher. Look at all this aggressive buying, okay? Look, all these green candles, that's aggressive buying. It's not like pushed up, pull back, pushed up, pull back, pushed up, pull back. Aggressive buying. One green candle after another to the upside, breaking through structure, breaking, taking out the highs here and taking out these highs right here, okay? Demand. Now when we see the aggressive buying coming out of this area, so we've got a structure break or price taking out a key area of supply. We've got a demand zone being created. We've got aggressive buying to the upside. You have to start classifying the criteria to help you determine, is it a high probability zone? And in this case here, I will classify this as a high probability zone because we've got aggressive buying, okay? That broke through an area, a major area structure, a key area supply sitting right here, okay? All right, so now we've identified we've got aggressive buying, right? Now, here's the thing too that you want to bring into the fold or into the picture. What's called a gap, or more so we call imbalance, okay? Aggressive buying, was there a gap or an imbalance when price made this powerful run to the upside, followed by all these green candles, okay? Now, you have to think to yourself, logically speaking, do you think retail traders are making a move like this with such force to the upside? Do we as retail traders have the capital to make major shifts in the market like that? No. And those are the banks and the institutions. When you see a major area supply or structure right here and look to see price making these higher highs and higher lows, and it's pulling back significantly, all right, and then you see a big powerful thrust to the upside, and it could be vice versa, you know, price like right here, pushing hard to the downside, pulling back, and then with significant force moving to the downside real quick and fast, all right, followed by all this aggressive selling. What do you think? Who do you think is making those moves like that? The banks, institutions, okay? Now getting back to what we're talking about on this side of the fence over here, all right? Not to get anybody confused. So aggressive buying. We as retail traders are not making those moves, guys. You have to understand that. Only the banks and institutions. So as retail traders, it is our goal to grab the coattail of and ride along with the moves we see that are taking place by the big boys, the big players in the market, okay? Because they have the capital to push and pull the market, and we want to be in the same playing field as them, all right? Never opposing. We don't want to play defense with them, okay? All right, because you will get ran over. So, aggressive buying by the banks, by the institutions, okay? Now, we need to see, this is one of the most important things, is there a key area or imbalance or a gap that was an area where price, when it moved pretty quickly, was there an imbalance? Was there a gap created that where price didn't come back immediately to that area, okay? And if so, then that is another key criteria that helps us gauge high probability zones, okay? Now, let's take a look, all right? We'll blow this up a little bit. As price made a move to the upside pretty fast, taking out this area like I said right here, okay? Creating an area of demand right here. Look, price made a run to the upside. So let's look to see some area where there may be a gap. We're looking for a gap back at the area of demand, okay? So price moves to the upside, pulls back, breaks higher, pulls back again. So we got kind of a swing within this, you know, a swing here, okay, to the upside with this demand at. So right here, look as price broke this area right here to the upside when it moved away from this area. It pushed up, it pulled back, and then it finally broke higher with the close of this green candle to the upside, breaking above this area right here, this little candle right here, little hammer candle to the downside, if you want to say. All right. So, or it could be this little area, it could be this area here, but I'm focusing on this right here because it's price pushed up, it pulled back, broke higher. This was the move right here to the upside that took out this area over here. Okay. So, creating this area of demand. Now, with the candle that closed to the upside, all right, that where the move started to occur, okay, to the upside with quick force to the upside was this green candle right here. Now, when it broke and shifted to the upside and closed and broke above these wicks right here, look what happened. It broke above, closed, okay? Then it moved up again, okay? Moved up again. But look here. There's a small imbalance right here, okay? And there's some more imbalances too, but we're going to talk about the imbalance back at the area of demand, all right? So I'm going to take a arrow line. Price broke above right here, okay? When it did that, so we're going to put an arrow right here, okay? Let's blow this up a little bit more so we can see what we're talking about. Then when price broke above with this green candle to the upside and closed, okay? Let's take a look here, get an arrow here, all right? This is where this difference right here, this is where the imbalance lies at right here, okay? But what you had that took place here was that this next candle on the move to the upside wicked out right here, okay? It wicked out right here. Now, pay attention. So when this next candle closes, or the wick of this candle closes, comes down a little lower, let's say it comes right here. Look, we still have an imbalance, guys, right here. Price has to come back and fill this gap or this imbalance here. And what we want to do as buyers, okay, as traders, we want to wait for that opportunity when price pulls back. Let's move this down to this area right here where demand rests at. Fill that imbalance area and look for the rejection, okay? Now, rejection for me is the close of a candle to the upside, okay, in this case here, because we want to be buyers, right? So we're waiting for price to come back to that demand zone, okay? When it comes back right here, it's not tapped into this demand zone here, guys, okay? It's not even filled this area where this imbalance lies at. Price comes back. When it taps into the demand zone right here, all right, and fills in this imbalance area here, this is what takes place. It comes back right here, all right, okay? When it finally taps into the demand zone, fills that imbalance area or fills in that gap, we're looking for what? The break of structure or break of a candle to the upside. Now, this candle here signifies or tells me a lot because this last red candle to the downside shows me what? It shows me that there was still momentum for or move. The market was still pushing to the downside. But when I saw this next candle to the upside, this hammer candle to the upside, this green candle right here, this kind of gives me the turning point to where, okay, the market is turned, getting a little bit bullish here, all right? And then the next candle that closes to the upside, I'm going long, okay? Now, here's the thing people always ask, where should I get out at, Where am I looking to get out at, all right? Now, you have to understand that there is support, a resistance right here in this area too, okay? Understand that. So your goal is to try to take price back up to this high right here, okay? An area where this liquidity rested at pretty much, okay? So we know there's liquidity resting right here because at the back end of every swing or either to the upside or downside, in this case here, we have a lower high right here. We know liquidity rests right here, all right? We know it does, okay? So take a look what happens. Price breaks this bullish candle right here. This next candle, because it closed, you can get it right there. Me, I'm a little aggressive. So already when I see something like this, price moving to the downside right here, and then this next candle being bullish, and when it starts to break above that, if I'm taking an aggressive entry, I'm already long. But if you're more of a conservative style trader, which I would highly recommend you, especially for new traders, is to wait for the next candle to close to go long and take it back up to the key area where, this high right here where liquidity rests at. If you got in right here at, say, 19 and a quarter, you're easy can pick up 3 or 4 points right here. Okay, pretty easy, all right? Even if you got 2.5 or, out of it, it's still a decent move, okay? Now, we're trading off of a 12 range chart. Now, the question is, well, where do I put my stop loss? Guys, there's 2 places, I say this over and over and over, that you can put your stop loss. If you are taking a trade off the rejection of this zone right here, let's draw the zone. Okay, that's one thing I failed to do was draw the zone. The zone for me, the demand is right here. Okay, so price taps into demand. This next bullish candle here, which is a hammer candle to the upside, take it at the when as it closes, the next candle as it closes, the green candle here above that candle, that green closes above the green bullish candle, go long, right? Okay, so where do you put your stop loss? There's 2 places, okay? The safest place if you're a conservative style trader is at the back end of this candle right here, this last candle to the down, or last candle right here before price started moving to the upside, okay? All right, this started the move back to the upside right here, okay? Even though it was short-lived and pushed lower, okay? But still, there was a trade to be taken right here because there was an imbalance as well as there was demand, okay? All right? So you have to be able to classify the criteria of things. We do not know. We cannot say the price is going to come all the way back up to this area right here where liquidity is, because there is liquidity right here, because we do not control the markets. Understand that. But one thing for sure is that it's all high probability based trading when we see things like this set up to where there was an imbalance leaving out of this area with aggressive buying and creating where an area of demand was resting. Okay, when you have all those factors that come together, then guess what? You have a means of a high probability trade setup, whether it gives you 2 points or 5 points or 10 points. Okay, understand that. All right. So my aim is to take the price back up to the high up here, at least trying to get back up to the high right here around 24, maybe even 25, and get out, okay? Or if I've got multiple contracts on, take most of my lot size off right here, and then maybe let a trade run behind that. But, by the time you do that, you put a stop loss somewhere, whatever the case is. If you trade with a hard stop, then you're going to, get stopped out. But you're going to get stopped out in profit is what I'm trying to say, okay? All right, because you're already in profit. Your stop loss, if you want to be conservative, at the back end right here, okay? Me, I'm an aggressive style, not aggressive. Well, I am aggressive, but I prefer to put my stop at the back end of where demand rests at, or the back end where supply rests at. So I'm going to put my stop a few ticks below the area of demand, okay? All right, it's the safest thing, because sometimes they will push the market up a little bit to come back and test this area and then take off, okay? So understand how that works. So either here, if you're going to be conservative, or at the back end of the area of demand right here. So I hope you guys understand that. That's what I'm talking about. So use the criteria for your own benefit, okay? Did you get a break of structure where price broke through a key area of demand or supply? In this case here, it broke through a key area of supply right here, or broke through supply. On this move, as price was making higher highs and higher lows to the upside, taking out supply, left behind a key area of demand where aggressive buying came out of, leaving behind an area of an imbalance. So when price comes back to that area, we can bet our bottom dollar that there's going to be some type of what? Rejection. And also play into the fact, the volume profile. Where does that trade lie at? At the lower portion of a high volume area. I like to take my trades, as I always say, buy the lows, sell the highs. Lower portion of the low volume area. So we have all this means of confirmation and confluence. That's what leads to the idea of high probability supply and demand trading. Understand it, okay? So let's see if we can find another example here. All right, so let's see if we can find an area of supply here. And I have one already drawn out on my charts here. Kind of the same thing you need to be looking for, okay? All right, so we're looking for, in this case here, an area of supply that's created. Meaning that we're looking for price to see if it broke through a key area or an area of demand, okay, creating an area of supply. All right, so you see price making a run to the upside here, making higher highs and higher lows, okay, pulls back, and moves up higher here. Now, take a look as price is making higher highs and higher lows, all right, then it turns around, starts making these little lower lows and lower highs to the downside, kind of moving sideways right here. Then it turns back around, starts making higher highs and higher lows to the upside. What do you see happening here as it's moving higher here? It does what? It takes out areas of structure or levels here. So like right here, price moved up, pulled back, broke higher, doing what? Taking out this area of structure or this level right here, right? And then it moves higher, pulls back again, pushes higher, okay? And then it does what? It turns back around, starts making lower lows and lower highs to the downside, pulls back, lower lows and lower highs to the downside. So, but what did it do on the move to the downside? Okay, after it moved higher, say for instance, just take a look, breaking through this area right here. All right, let's mark it. It's a little high right here. Okay, so it broke a level, broke an area structure, right? When it did that, what did it do? It left behind an area of demand right here. So pay attention. Okay, I'm gonna take that and mark it with an ellipse. Okay, just like that. Okay. All right. So leaving behind an area of demand. Take a look and see what happens now. Price pushes down. It pulls back. It breaks lower. Breaking through this area of demand. It took out this area of demand where this little bubble's at, right? As it moves lower. Now we can say we can go ahead and mark an area of supply. Okay. Our area of supply is going to be right here. So I'm marking with this box right here. Remember what I said. Look to see what price took out, in this case here, an area of demand to the downside, leaving behind an area of supply. Okay, just because we have supply does not going to mean that it's going to make it a high probability zone. Okay, we have to see a couple things. Was there aggressive selling? Yes. Was there a gap created? Yes. We're going to talk about the gap because the gap is the, I guess, the last part of the criteria that really would signal or clarify if it's going to be more of a high probability area. Okay. All right. Let's take a look. When we moved and made this swing to the downside, pulled back and broke lower, we created this area of demand. We had aggressive buying. Now, when price pushed down here and pulled back, okay, do you think we as retail traders are making or creating a move like this, a shift to the upside, and then turn around and make a major push to the downside? No. Big money is doing that, okay? Understand, that is created by the big ballers, the big players, the big people who have that inject hundreds of millions of dollars into the market, okay? So think about it. As they make this big move to the downside, they're breaking through demand, okay? Which was once demand, okay? All right, right here, now creates an area of supply. Aggressive selling we do have. Now, let's talk about that imbalance. Do we have an imbalance on the move to the downside when price moved and created this influx or create a great area of selling? Take a look. On that last green candle to the upside, right? Already got the zone mark. Before price turned around and rebroke, okay? This candle that rebroke this last green candle to the upside, this red candle was the one that started the big move to the downside. I mean, really these candles up here did, but the one that actually broke, okay, the last candle to the upside was this red candle right here. It shifted and made a power move to the downside, taking out this green candle, all right? And when it did that, it continued doing what? Red candle, red candle, red candle, red candle, okay? We got 1 candle, 2 candle, 3 candle, 4 candle, 5 down candles, okay? That created a massive or influx of selling to the downside. So that is one that makes it a high probability, trade enough for me, okay? All right, it makes it a greater area for me to really focus in on. But the thing that really stood out was this right here, that imbalanced area, or leaving behind an imbalance where price needs to come back to fill orders or to close that gap in. And that's what happens when you got an imbalance, okay, the market moves away from an area real quick, all right? What happens is a lot of orders probably did not get filled in that area, especially when you have an imbalance. So when the market gets back to that zone, in this case here, that supply zone, and then it fills in that gap or that imbalance area, you can almost bet your bottom dollar that that the big ballers, the big players, smart money is going to want to do what? Fill more orders, okay? So we have a gap as this candle here broke this candle to the downside right here, okay? And then the gap was left right here as well, okay? So we have this gap right here, all right? And price kept running to the downside. When did it come back to fill that gap? On the move back to the upside, it fills the gap. But what did it also do? It filled back in or tapped back into our supply zone. This makes it high probable when we have a gap leaving the area of supply, all right? And as traders, as retail traders, we're waiting for price to pull back to it. Fills the gap, fills in the imbalance, tap back into the supply zone. We'll wait to see what they're going to do from here. When I say they, I mean the banks and institutions. Rejection. What do I look for, guys, when I'm looking for rejection? A break of a candle in the opposite direction back to what? To the downside. So when I get the break of this candle, meaning taking out this last run to the candle to the upside, this green candle here that tapped in supply, filled in the imbalance, filled in the gap there. When it broke to the downside, the next red candle that takes out this green candle to the downside, I'm short. What's going to stop me from down here? And looking at the chart, nothing. There's no major swings back to the upside. I take the break right here when the candle closes here, and my aim is to take price back down to where? To the low here where liquidity rests. Look at this. If you got in right here at 40.12, it went all the way to the bottom, okay? and takes out liquidity right here at 4,000. That is 12 points, and it kept running. It broke it, it pulled back and broke to the downside, making a lower low, pulls back and continues running to the downside. Look at that. All the way down here to 83. So for all those out there that don't quite understand how I get into my trades and allow them to run, I've said this at the beginning of the year. Prior to the beginning of the year, I said that one of my major goals is going to be to do what? Is to find out a way or to refocus or focus in on refining my trades to where I can get more out of them. That's the goal. Because when we let our runners run and look for more areas where there's profit there or take profit from or bigger targets, we create more profit for ourselves in the end. Okay? So when this right here was a powerful setup. When I see something like this here where price taps back into the supply zone, where it had aggressive selling, filling in the gap or imbalance, man, and I see like this big move back to the upside where there's a lot of buying right here, okay, tapping back into this area of supply, I'm looking to go short to fill in this area back down here at the low. Definitely, 100%, no doubt. There's nothing that's going to stop me, okay? Nothing that's standing in the way of really, as far as support, that's going to stop me, okay? So I get in to close this candle here and take the ride back to the downside. As simple as that. So what I'm trying to basically break down to you guys is that always think in terms of high probability. What am I looking for? Set the criteria, write it down. You're looking for a break of structure where price is taking out either an area of supply or demand. If it's taking out supply, okay, then that means you're looking for an area of demand for price to pull back to. If it's taking out demand, then that means you're looking for price to pull back to a key area of supply. Number two, you want to have or notice where there's aggressive selling or buying coming out of that area of supply or demand. So when price, like in this case right here, when it created this area of supply right here, it had aggressive selling. All right, so that helps me determine, okay, it's starting to look more so as a means of a high probability area because we have aggressive selling that took out a demand zone. I'm looking for it to pull back here, but the key identifier that also kind of ties the whole puzzle together is there an imbalance resting at the area of supply, okay, or demand? In this case here, supply. Yes. So I have all these means of confirmation coming together in confluence, high probability zone. Simple as that. So please rewatch this video if you need to understand the criteria, things that I'm looking for, and hopefully I broke it down enough so you got an example of a demand zone or a demand setup or high probability setup based on demand and a high probability setup based on supply. What to do? Write the criteria down. Break a structure. Okay? Aggressive buying or selling. All right? Was there a gap? Was there an imbalance that needed to be where price needed to fill back in? Okay, what does that mean, the imbalance? That means that orders were filled and probably thousands, we don't know, are left behind. But we want to be on that gravy train when price returns back to that area of supply or demand, okay? Guys, that's all I have for you in this video. If you enjoyed the video, enjoyed the content, please drop a like on the video. I would definitely greatly appreciate it. And if you're not a subscriber, go ahead and take the time to sub right now. Now, if you're interested, because people have been, again, DMing me and sending me comments, whatever the case is, about the elite membership side, I am not an educator or a trainer, but there is an elite membership side, basically where YouTube offers these tier-based programs. And if you click on the join button on the homepage of this channel, or the join button on any video, okay, it should be up there where the title, somewhere where the title of the video is. Click on that, you'll see two tiers, the loyal channel supporter and the elite member tier, okay? The elite member tier, which you receive for $6.99 a month, which is basically a price of a cup of coffee a month, you receive the trade breakdowns where I go into detail about my trade entries, as well as the playlist of videos. If you look down, you'll see once you join and you have access to the membership side, click on the membership tab on the channel, then you'll see a commented area or comment where I made a post in the comment section that has tons of links to a playlist of videos that hone in on or where I go into detail about my strategy and how I actually trade, okay? I'm giving you away the information that I've carried with me for years and giving it away for, basically for free here on the channel, guys. I mean, for me, it's like I'm not going to sit here and charge you for a course or a class. I don't have the time to do so. So to me, it's just all about giving back. Okay, giving forward to individuals that may be in question of or trying to follow the same path or just has the same amount of passion as I do. I'm doing this just for the mere fact of inspire other individuals. But for the price of a cup of coffee, what you receive in each, in the on the elite side, on the elite membership side, I mean, it's invaluable. I'll say it like that, okay? I mean, tons of individuals have picked up on the way that I trade, even in the community, the Discord community. Again, if you're interested in joining the Discord community, then click on and find that link down in the description portion of the video. But there are individuals who are making money and are doing well trading based on the information that they received and picked up on watching or becoming an elite member. All right, I mean, it takes time. It's not going to happen overnight. I mean, for me, it did. It took me 2 years to really get to the point to where I could start to be consistently profitable. All right, but everybody's learning curve is different, so I understand that. But look, I appreciate everyone tuning into the video. Again, drop a like on the video. Hit the subscribe button if you're not a current subscriber, and I'll look to see you guys in the next video. All right. Hopefully you took away some good valuable information from this video, and it will help you identify more so high probability zones, okay? And where to put your stop at, as well as where you probably want to focus on taking your profit target at, okay? Thank you. Have a great rest of your weekend, and I'll see you next week in the trading session, especially to everyone who's currently a Discord member, okay? I will see you guys starting Monday, all right? And when we get back into the routine of things, taking a look and sharing our posts and our entries on Discord. And yeah, that's it. Everyone else, have a great week. See you then.